What's up, everyone? Today, the U.S. stock market just reversed direction after President Trump hinted at a possible end to the war with Iran, even if the crucial Strait of Hormuz stays closed. The Dow, S&P 500, and Nasdaq futures jumped sharply. But is this real relief or just a temporary spike? Let's break it down. For weeks, markets have been in a downward spiral, with the S&P 500 and Nasdaq flirting with correction territory, and oil prices surging above $110 per barrel due to Middle East tensions. Investors are nervous because when oil rises, inflation fears rise, and that threatens interest rate expectations everywhere. But tonight's news changed the mood. U.S. stock futures jumped nearly 1% or more as traders reacted to a report that Trump is willing to end the military campaign with Iran, even if the Strait of Hormuz remains largely closed. According to major outlets, Trump told aides that he's prepared to de-escalate the conflict and focus on diplomacy, even without reopening Hormuz right away. That's a big deal because that waterway handles a fifth of global oil traffic, and its closure has been a major source of market stress. So what happened? Futures across the board jumped. Dow Jones, S&P 500, and Nasdaq futures all climbed sharply after those remarks hit the wires. That's a classic risk-on move where traders suddenly feel less scared of prolonged geopolitical flare-ups. But here's the twist. Regular trading earlier showed a mixed picture. The Dow slightly up, while the S&P 500 and Nasdaq were actually down in regular hours, showing ongoing volatility. Meanwhile, oil prices reacted too, with Brent crude and U.S. crude prices fluctuating as traders wrestle with the idea that the war might end, but supply disruptions could still last. That has huge ripple effects on inflation, on the cost of goods, and on Fed policy coming later this year. So, should you buy the dip? Here's the honest answer. Maybe, but be cautious. Geopolitical headlines are moving markets right now more than earnings or economic data. That means sentiment swings can be dramatic and fast. That's not ideal for long-term investors who value stability, but it can create short-term trading opportunities. In the next few days, watch job openings data and consumer confidence reports, oil price moves, if oil stays high, that keeps inflation and rate fears alive, and any official statements out of Tehran. If Iran signals talks aren't real, markets could swing back down. For everyday investors and viewers, if you're a long-term investor, don't panic. Moves like this are driven by short-term fear and headlines. If you're trading short-term, this volatility is an opportunity, but be disciplined and protect your capital. If you found this breakdown useful, hit like, subscribe, and ring the bell because we break down market moves just like this every week. Tell me in the comments, are you bullish or bearish right now? Let's start that conversation. Thanks for watching, and I'll see you in the next update.